जिंदगी चाहे जो भी हो मैं हूँ चाहे जो भी हो मैं हूँ
सर, पेशेंट के लिए कौन सा रूम प्रेफर करेंगे आप?
जिंदगी भर के प्यार का कोई रेट कार्ड नहीं होता। टाटा AIG हेल्थ इंश्योरेंस, विद यू लाइक फैमिली, विद यू ऑलवेज।
Web Summit Qatar in association with CNBC-TV18. This is TV18 and you're watching CNBC-TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is my colleague Ritu Singh. These are the top headlines from the startup space. Fintech major Incred Group acquires Dubai-based financial services firm Arrow Capital DIFC with an aim to expand its footprint in the Middle East. Following the acquisition, Incred Global Wealth will manage assets exceeding $2 billion. AI startup Icons, a specialist in hyper-realistic AI-powered digital avatars and holographic experiences, bags $5 million in a pre-Series A round from a clutch of investors, including Mark Jordan of Blue Amber Investments and state-of-the-art entertainment Ramana Thumu, CTO Expedia, and investors Madhusudan Kela and Akash Pansali. Cherrapunji Craft Gin raises $1.2 million in pre-Series A round from Japanese investors with participation from AngelList India Syndicate. Electric aircraft startup E-Plane Company to supply 788 air ambulances in a deal valued at more than $1 billion. As per Reuters, the firm will supply the electric vertical takeoff and landing or eVTOL aircraft to air ambulance service provider ICAT. Food and grocery delivery major Zomato has launched an artificial intelligence-powered customer support platform Nugget for businesses. It is the first product from Zomato Labs, the company's incubator for in-house innovations. Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Multi-cloud storage management platform Lucidity has raised a $21 million Series A funding round led by Westbridge Capital with participation from existing investor Alpha Wave. Its no-ops autonomous application agnostic layer seamlessly integrates with existing applications and environments without requiring a single line of code to be changed. That's what the company claims, and by streamlining operations, Lucidity enables it and develops organizations to reclaim hundreds of hours, allowing teams to focus on higher impact initiatives that drive innovation and efficiency. And joining me today is its co-founder, Vatsal Rastogi. Vatsal, welcome to Startup Street. And, first up, you call yourselves the world's only multi-cloud storage management platform. So you're saying you don't have competition. If you could take us through your offerings and tell us how you're helping enterprises optimize cloud storage.
Well, thanks a lot for having me here, first of all, and it's a real pleasure to be here. I'll talk more about what we are doing as an organization. Storage management is the space in which we are at, and organizations in general spend a lot of their resources into cloud management. It's set to touch about $230 billion within 2025 itself, and within this, the cloud verticals infrastructures is the biggest spender, and this is one of the areas that we are targeting as well. Within storage infrastructure, cloud infrastructure, about 30 to 40% of the resources go to waste. They are unused capacity and they are just added as buffer space, within which storage is one of the areas which has not gotten the due attention that it should so far. And this is the space that we are targeting. With Lucidity, we have brought the world's first multi-cloud storage orchestration platform. We are live in AWS, Azure, and GCP, and we are the only company in the world to be able to do so. Our recent fundraisers and our growth and our customer love has been a testament to that. We serve one of the largest airlines globally. We serve one of the largest credit rating firms and some of the notable names in the Fortune 1000 companies.
All right. You also claim that your storage management platform helps clients that are Fortune 500 companies cut costs by up to 70%. Vatsal, take us to your tech edge. How do you do this on real-time data demands?
Right. That's a good question. So what happens is that enterprises typically over provision their infrastructure by a margin. In a lot of cases, it's on an average, it's 3 to 5x. And in some cases, we've seen it to be about 10 times more provisioned, which means they're actually paying 10 times more than what they ought to. And this is where Lucidity comes in. With our intelligent auto scaling mechanism, we are able to cut down this buffer, and we are able to optimize their infrastructure so that they actually pay only what they use. Now we are with our inbuilt technology, where we work very closely with the infrastructure layer and the operating system layer, we are able to bring these improvements and innovations to the customer. And we are able to act in real-time basis and in a matter of seconds, make adjustment so that the customer does not end up paying anything more than what they ought to.
All right, let's now get to the fundraise, Vatsal. Tell us, how do you plan to allocate the funds raised? I understand you plan to expand the go-to-market team and continue innovating the platform to solve key storage management problems for enterprises. Share with us what's in the pipeline.
Right, that's a really good question, and you've been spot on in terms of how we want to address this fundraise as well. It's going to be a twofold approach. We are in a great position in terms of our market positioning. It's a greenfield space, and we want to bring this product in front of as many customers as possible. Majority of the customers are global enterprises, and we would like to be in front of them as much as possible. So a significant part of the investment goes there. That being said, we are a deep tech organization, and innovation is the living soul of the organization. So we will continue to invest into R&D and look to bring more innovative product and solutions to our customers.
Also, since inception in 2021, Lucidity has seen 400% year-over-year growth. Vatsal, what have been the growth drivers for you? And if you could take us through your current business growth in terms of revenues and scale.
Right. So that's actually a testament to the value proposition that we are bringing to our customers. And our customers absolutely love what we are doing. And we look to capitalize on that. And we want to continue to be in front of our customers as much as possible, provide them real tangible solutions to the problem that they're looking for. And we want to be able to do it consistently. One of the things that I'd like to highlight is that this is a very mission critical space for our customers. And the only reason they trust us is because we are able to deliver them value consistently over the years. And we look to double down on that and let the word of mouth speak for itself and be able to attract as much customers as possible.
So any targets that you can share with us?
Unfortunately, I won't be able to share specifics here, but we want to go very aggressive here. We want to at least triple our revenue within this year itself and set us up very nicely for the upcoming years.
Okay. Vatsal, as the adoption of cloud continues to accelerate, of course, there's an increasing need for its optimization and a simultaneous need to reduce overall cloud spend as well. What kind of a potential going forward do you see for Lucidity? And also, if you could share your future revenue and expansion targets, any new markets that you're eyeing?
Right. So that's a really good question, because we are very bullish about what the future lies ahead. And with the digital transformation age that has begun over the last few years, and AI being a true catalyst of this age as well, the next few years are going to see data generation explode. Data has become the fuel of these organizations, and this is the blood and soul of these organizations. And we want to be at that layer where we provide them truly innovative solutions that help address their problems. So to answer your question, we foresee that the market is going to expand multifold. Right now, we are bringing one product to our customers, but that's not the end goal. We want to bring them a lot more offerings, which look to address multitudes of challenges that they face right now, and they don't have a solution in sight, and be able to address all these diverse markets.
Okay. One final question before I let you go, Vatsal. This Series A round follows a seed round by BNext that you raised in June last year. This round brings your total funding to $31 million. Will you be looking to raise more funds to fuel your growth plans anytime soon?
Oh, absolutely. We would definitely want to look to expand from here, but we would like to take this in terms of a requirement basis. Now that we have a fresh infusion of capital, we look to actually make this capital work. And whenever we are at the right stage, we would look to go out into the market again.
All right, with that, it's time for me to wrap up our conversation. Vatsal, wish you the very best for all your growth plans, and many thanks for joining us on Startup Street today.
Thanks a lot for having me.
Tech company Veranda Learning Solutions has announced its earnings for the third quarter, reporting a loss of 203 crores on a consolidated basis compared to a loss of 16.71 crores in the same period last year. Its total income stood at 98.3 crores, up about 17% over the previous year. Now, the company said these earnings were impacted by a combination of academic and market factors, and it is now targeting revenues of more than 500 crores for this financial year. For more on this, joining me now is Suresh Kalpati, the ED and Chairman of Veranda Learning Solutions. Suresh, thanks very much for your time here on CNBC-TV18. Widening losses and just a modest 17% increase in revenues. What were the factors, tell us, that impacted your earnings in the quarter, and what sort of improvement do you see going ahead?
I think a couple of factors. First is from a business operations perspective. On our commerce coaching segment, there has been a change in the CA academic calendar, which has moved from 2 exams a year to 3 exams a year. So the system is sort of settling down. The student base is also settling down to the new calendar of events. So that's one. The second one, specific to our government test prep, there has been no notifications in most of the southern states in India. And as you would know, the numbers for the test prep segment for government significantly ramps up when there is a notification for employment in that segment. The third, of course, is a one-time write-off that we took. This is predominantly non-cash, intangible assets that had come in as part of provisioning for the acquisitions we have done. So we have taken this quarter as a one-time, almost all of which is non-cash and intangible assets that we have amortized and accelerated their depreciation.
Well, you've also scaled down your revenue target for the current financial year, because earlier you were told at 600 crores, which you've now brought down to 500 crores. What is the reason for this?
I think it's essentially only because the fourth quarter is yet to sort of go through completely. And we are not sure of further notifications that could come, or for how the CA pass percentages are going to turn out when the results come out during the second half of this month. If those results come out as we expect, as it has been last year, and the notifications come, this revenue could significantly ramp up from 500. So what we had indicated is, assuming the worst case picture, we expect our revenues to still cross 500 crores for the year, and our pro forma pre-adjusted EBITDA to still cross about 130 crores for FY25.
Well, all right. In that case, how do you see the EBITDA margins evolving in the coming quarters as this one-time adjustment normalizes? Also, how many additional schools are you looking to manage, colleges you will tie up with, and new product offerings that you have in the coming months?
Currently, we manage about 5 K-12 schools and 2 international schools. We expect to tie up another 5 more schools during this quarter, Q4. Going forward, over the next 3-4 years, our plan is to increase the base of managed schools to over 100 schools all of India. As we speak, we have a pipeline of close to 40 schools that we have already looked at, have shortlisted for signing MOUs and start work. As far as our EBITDA margins are concerned, we expect our EBITDA margins to start settling around 25-26% on a consolidated basis for all the segments that we operate in.
Well, Veranda had recently announced 2 acquisitions, the BB Virtuals one and the Navkar Digital Institute. Under your Veranda 2.0 strategy, you're talking about focusing on integrating past acquisitions and driving organic growth. So given the recent restructuring and impairment, are we going to see a more selective approach to your M&A going forward?
As part of Veranda 1.0, it was largely built through acquisitions. And with Navkar and Banwar that we have just announced, we have sort of come to the end of our acquisition cycle. We pretty much have everything that we need to build what we call as the fabric of Veranda. Going forward, our focus will be predominantly on 4 segments. The first is the academic segment, where we will focus on K-12 schools and international schools that we will manage. The second one is commerce coaching under the larger brand of JK Shah classes, which will include Banwar, Tapasya, Logic, and Navkar. And that's a significantly large segment for us, where we expect the EBITDA for FY25 pro forma to be over 110 crores just for that segment alone. The third segment for us is government test prep, where we are very strong in the south of India under the brand of Veranda Race. That would be our third focus area. The fourth one, of course, is what we internally call as occasional, which is largely B2C, B2B training for technology-related programs and for higher ed programs in combinations with leading universities like IITs, IIMs in India, and Illinois Institute of Tech, Purdue, and Cambridge outside of India. So those are going to be our four key areas of focus. And you will see going forward that we will start reporting very strong numbers across these four sectors, all of which has come from acquisitions. And going forward, all of our growth will come from organic growth within these four identified sectors.
Well, finally, Suresh, in December, the company had announced raising about 250 crores through a preferential issue. Beyond this, are you planning any other fundraising, either through debt or equity?
Currently, we have about 450 crores of consolidated debt that we have, largely funded through Bearings credit. We do not need further funds to build out our business. As far as our ability to be able to deleverage, that will be a constant focus for the company to deleverage, because quite a bit of our monies that we generate from our profits is going into servicing this debt and leaves not so much for us to build our business organically. So the idea would be to continue to build our operating margins significantly and as quickly as possible deleverage the company and become debt-free.
All right, Suresh, that's all the time we had. Thank you very much for joining us today.
Thank you so much.
Well, on that note, it's time for us to head into a short break. But coming up on the other side, global content creator Nuseir Yassin, popularly known as Nas Daily, is building a media empire and has now launched 1000 Media. The agency is likely to help Indian brands go viral the Nas Daily way. Stay tuned to find out how he plans to do so.
आज की सीख और कल की प्लानिंग ही हमारे कल को आकार देती है। HDFC लाइफ, सर उठा के जियो।
जियो बीपी में इंटरनेशनल क्वालिटी फ्यूल्स एट नो एक्स्ट्रा कॉस्ट, सिर्फ मेरे लिए।
पंकज सर, सबके लिए।
मेकअप
आइए सर।
सादा पेट्रोल ब्रो।
सादा पेट्रोल नो, ओनली सुपीरियर क्वालिटी पेट्रोल एट नो एक्स्ट्रा कॉस्ट।
लगता है पहचान लिया। ओए, डीजल सादा।
यहाँ डीजल सिर्फ बढ़िया क्वालिटी वाला जो दे माइलेज 4.3% तक ज्यादा।
ओ दादा, पेट्रोल सादा।
यहाँ पेट्रोल सिर्फ सुपीरियर क्वालिटी वाला
एट नो एक्स्ट्रा कॉस्ट, सिर्फ मेरे लिए ना।
पंकज सर, नहीं सर,
बोला था ना। जियो बीपी में इंटरनेशनल क्वालिटी फ्यूल्स अब सबके लिए एट नो एक्स्ट्रा कॉस्ट।
All it takes is one. To spark a lifetime of moments that shine. Natural solitaire diamonds from Malabar. Your greatest love story awaits. Go ahead, find your one. Solitaire One. Find your one.
Web Summit Qatar in association with CNBC-TV18.
Mama must be missing us, nah?
Let's take you for a spin, give me one day. Feel the itch under my skin, it's a one day. You believe it when you see me and done, hey. It doesn't matter, just gotta get going.
New GT line, Tygoon and Virtus.
Volkswagen.
Welcome back to Startup Street. Global content creator Nas Daily, or Nuseir Yassin, with over 70 million followers, is building a media empire and has now launched 1000 Media, an AI platform for producing content at reduced costs and unique original productions in the Nas Daily formula. Leveraging artificial intelligence, 1000 Media will empower impact companies and forward-thinking founders to build and enhance their online presence. Take a look.
Born in Israel to Palestinian parents, this Harvard graduate quit his cushy tech job in 2016 to travel the world and tell compelling stories.
Everybody hates Air India.
Wait until you see this flight I took on Air India.
Guys, I'm not joking. It's 11 p.m. at night, and this is the sun. It doesn't go down. It doesn't get dark, and I can't sleep. What's happening?
This street in Thailand does not have pork and is 100% halal.
From New Delhi to New York, from Colombo to Columbus, all in just 1 minute. He committed to documenting every day of his life for 1,000 days. 2 years into his project, his videos were already garnering millions of views. At the age of just 26, he became a millionaire. He then built his own media company, and now he's launched another platform.
Dear India, big news. I am launching a company in your country.
A testament to the power of creator economy and the potential it holds. Joining me today is Nuseir Yassin, aka Nas Daily. Thank you, Nuseir, for joining us on CNBC-TV18. From content creator to entrepreneur, you started out Nas Daily and you established it as a media company. Firstly, let's understand the verticals that you're running within Nas Daily and what are the streams of revenue that you have there.
Look, we built Nas Daily. It was a very big media company. It is a very big media company. But under it, we built many different verticals. A technology company called Nas.io, a hotel called Nas House, an event, Nas Summit, an education company, Nas Academy.
You've now launched a social media company, which is called 1000 Media, which is going to use AI to enhance the online presence of impact companies and forward-looking founders. Could you elaborate on the company a little bit and tell me how will it work?
Look, in the past, it used to take 15 hours to make a Nas Daily video, right? Research cost a lot of time. Scripting cost a lot of time. Shooting, editing. You know, now we can take down that 15 hours into 5 hours. And that's really good. This means we can now create 1,000 pieces of content for very fast, very cheap. That is the opportunity in the digital media world. That's why this 1000 Media is different from all the other agencies, because it is technology first, creativity second, and then customer support third.
Is this a way for you to give back to the society?
Nas Daily is our way to give back. This is to build a big business, to help brands, governments, nonprofits, businesses, small and big, tell their story. It's a real business. Nas Daily is almost like our nonprofit. And 1000 Media is our for-profit company.
When you started out, you've made several pivots along the way. You started from Facebook, but when its organic reach had declined, you pivoted to long-form storytelling through YouTube, and then you caught onto the trend of short-form storytelling through social media, Shorts, TikTok, and Instagram. So help me understand, how do you tailor your content to specific needs?
This is a great question. Every 2 years, social media changes. First of all, you like 1 minute, then you like 10-minute videos, then you like 15-second videos, then you like TikTok, then Square, then vertical. This world of social media changes so much. This is why one of the products of 1000 Media is called mentorship. We mentor your team on how to keep up with the social media trends. This industry means that you have to be awake 24/7.
Yeah.
You can never relax. And with Nas Daily, I could never relax. And I think that's like that's what every company needs to also do, is always stay up to date with what's changing on social media.
If I have to bring in the analogy of, say, direct to consumer, consumers there are spoiled for choices, but the same goes even for the contents that we are seeing on social media today. How does one bring in the differentiating factor?
The differentiation factor is education, edutainment. We call it edutainment. The majority of the content on the internet is boring educational or very entertaining and no education. How can you make education entertaining? That is the content that social media needs, and we don't have enough of it. I don't believe that social media is too busy. It's going to get much busier in the future, especially with AI content. So we haven't seen anything yet.
Help us understand that how do content creators make money?
The average creator on Instagram makes $0.
Okay.
$0, right? You can get 1 million views and make $0. People need to understand that. The average YouTube Shorts creator also makes $0.
Okay.
This is why brands and community are so important, because social media does not pay. So because social media does not pay, people end up needing brand deals. But I think brand deals are also dangerous. That's why eventually a content creator should make money from their community. That is why we built Nas.io. Now, some creators make $100, but other creators make $100,000 in a month. The beauty of content creation is that you can start with $100 today. Next month, you can be at $10,000. It goes up exponentially. That's the beauty of it.
Well, that was Nuseir Yassin on Nas Daily on building a media empire and launching 1000 Media. With that, it's a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.
Presented by HSBC.
It keeps you cool when you're driving. It's a chill car.
New Tiago.ev. New tech, new style, new colors. It's a chill car.
जियो बीपी में इंटरनेशनल क्वालिटी फ्यूल्स एट नो एक्स्ट्रा कॉस्ट, सिर्फ मेरे लिए।
पंकज सर, सबके लिए।
मेकअप
आइए सर।
सादा